2, 1. Well, hello and welcome to another Financial Planning Solutions. Here, Linda, we are in June of 2022.
Yes.
It's been
hard to believe.
Yeah, it's been a rough couple of years since we've actually been in our little studio here to talk to people. We've done some Zoom calls and that sort of thing.
Yeah.
But here we are back. It's sort of reminiscent of a time before when we had some rough economic conditions, and we were really looking at markets that were not behaving the way we would like them to behave,
Yeah.
but that they do behave over time. You know, and you've been in this business for how many years now? I know that maybe you don't
many
want
years. as many people, 20 some years for sure, 25, 28, I don't know, something like that, around.
So during this time, you know, everybody's happy when markets go up, you know, and, you know, there's a sense of euphoria, you know. Good times are going to last forever, but that's not the case.
No.
What happens anyway?
Oh, well, life happens. I mean, we've sort of been throwing everything in the kitchen sink when we look at 2022, though. As John mentioned, when people were opening up their statements at the beginning of January, looking at December 31st, everything looked really great, and we certainly were relieved and enjoying looking at those pages. And then come the first quarter of the year, we've seen nothing but turmoil, certainly all kinds of problems in the world, all kinds of question marks. The market doesn't like question marks. The market would actually prefer to know worst case scenario and then be looking at preparations for how to deal with that, as opposed to nothing but questions. And so when you're looking at statements or you're looking at online, everything's dropped significantly because there are all these unknowns that are causing the market turmoil. But as John said, this is not like we've never been here before, and certainly no one ever likes to see it like this. And even though the reasons why the markets will drop change, they do go up and down, and without a doubt, just as we've seen the housing market rise over these last while, it won't stay there. It's already had a bit of softening, and as everything else, everything that goes up does come down. Within that, what happens though is those people who remain invested are the wise people, and if you can't stand to look, don't, because that'll protect you from having sleepless nights or any stress that you don't need to put on yourself. But during that time, those are the opportunities. Those are the times when things work. Unfortunately, the way the human psyche works is completely different when it comes to looking at statements and looking at your assets. If you go into the grocery store, you go into Canadian Tire, and you see a sale on something, you don't say, oh my gosh, that object is no longer any good. Look at what it's dropped to.
That's right. Well, here we
You pick up a couple extra.
In our little studio here, which actually is our boardroom here at Financial Decisions, just looking at some of the items we've posted here, and it shows that over the years there's this particular cycle that takes place.
Right.
Let's go back to 2008.
Right.
Which is in a lot of people's memories, if they can recall back then,
Sure.
was a time quite similar to what we have now.
Probably even worse. I mean, I would certainly say if some of you that did live through that recall, there was some talk that this would be a never-ending situation, that it was, compared to 1929. And so on. And unfortunately, what happens is when you do get into those lows, people tend to look at it as the bleakest and worst case scenario, as opposed to looking at it as a cycle and a time in life. Certainly in those times, the managers are using that to actually put you in better positions down the road.
So this means that you're talking about going into a Canadian Tire or a grocery store and seeing items on sale. Does this mean that if I have some extra money, maybe this might be the time to invest?
Absolutely. That's exactly the way to look at it. Things are on sale. The companies that have dropped in value are still there to do the same services, to still provide the same products that they always have, and they're not going to disappear. And that's what I think is really important to look at, is that you're not going to stop buying shampoo and toothpaste. You're not going to stop using your phone. You're not going to stop doing any of those kind of core things. And if you really look at where most of your investments are, they're in those very ordinary, everyday type of things that everybody is using and needs.
And going to continue to use and need.
Yes.
Now, our sign behind us here, Financial Planning Solutions, now here at Financial Decisions, we'd been looking at that, and people's money we're very concerned about, and we want to make sure that it's in the best hands possible.
For sure.
In other words, people who really know how to look at money and markets as well. And that's why over the past period of time we've actually made a few changes and have people who are probably even better looking after money than those in the past. We've seized this opportunity.
That's right. For many of you that have already had meetings or discussions with us, you've moved over to the Croft Financial Group, and for those that we haven't been able to connect to have those meetings, that will be something that we're looking at doing in the future. So if you haven't had a chance, please reach back out to us, because we're trying to tap you on the shoulder as well.
Now these people, the Croft Financial Group, we're dealing with actually people who actually manage money themselves, right? So it's the opportunity for our clients to deal with people who are, you might say, on the ground floor.
Absolutely. Certainly they have years of experience with the opportunity to do it at the most cost-effective way possible so that we can save some money for everybody. And they do have the right emotional attitude. They do have the skill set and the experience to manage it as what I call a pension management style, looking at preserving capital as much as possible, but being able to grow it so that you're keeping up with the cost of living, which we all know when we go to the gas pumps or the grocery store. We're seeing things go up, and you need to have your investments in a position to do the same over the long haul.
So this is really one of the solutions that we've looked at.
Yeah.
And we know that people are going to really benefit from it. Now, of course, we've come through this pandemic. Well, we're not really maybe all the way through it. Who knows, really, for sure. And we've been impacted, of course, like everyone else.
Sure.
And this is going on into, probably we're looking into the third year. And all this is coupled in with a war in the Ukraine, with inflation, with that we, as you mentioned, the housing bubble. All these factors seem to have really come to a head almost, and the reason that we're experiencing this particular situation.
Well, if you look at it, it's not just so much come to a head, but as that it's tons of different factors that are playing into things. We're looking at, during COVID, it changed how people work and made some people decide to work in a different way, in a different industry. So we are having employment shortages, which are impacting. We're having supply chain shortages, which are impacting everybody. And so some of this is the inflation pushing, and some of this is also the government's trying to figure out how to manage things, and that's why the interest rates have arisen, and that there's other policies that they're looking at to see what they can do differently. And so, as I said earlier, lots of question marks.
Now, one thing we have noticed, of course, that because many of our clients have been with us for many, many years, and we don't see a degree of panic that we can see in other areas, and people saying, well, maybe we better cash in, and things are going south, so maybe it's better just to take our money out now, and maybe not run, but and we were going to take the money out and we're going to go back in a little bit later on when it's safe. But those safe periods, it's hard to tell.
Well, it's impossible to tell. and the most accomplished portfolio manager or the most accomplished stock picker, will unequivocally tell you that that's suicide. If you go to cash, then it's no longer just a loss on paper. It's a real loss. You actually no longer have that money because you've made it real. Mm-hmm. It's not just something on paper. And knowing when to go back is a fool's game. You're never going to know, because when things turn, they turn very quickly. Those people that are working day in and day out in the markets, they look at the underlying companies and choose to see what kind of sale price that they are in, and then incrementally will go back. Not just, this is the right day, because there's never a right day.
Now, when it comes to, having money, saving money, you have those type of investments that are relatively safe, but don't give you too many returns. But nevertheless, we all need money that's safe in order to, in order to live our lives daily. And we need that extra amount of money that's going to save for retirement or special needs. But how do you know which is which? Is there any magic formula as how much you should have, safe, as it were, as against those dollars that are put into growth?
Well, I think magic is maybe the wrong choice of words. There's no magic. There is what works for you. Mm-hmm. So it depends on what your circumstances are. Anything that's shorter term, that you're looking to purchase a vehicle in a year from now, or you're looking to purchase a house and you're building a down payment, if that's, a year, 18 months out, something like that, then that money should be safe. If it's something that is longer term and you don't know when you're going to need it, eventually, you want it to be there for you, but it's 5 years down the road or it's 20 years down the road, then that money should be growing for you. Everybody's circumstances are different. Yeah. Everybody's goals are different. And that's why it's really important that we are doing real financial planning, that we are connecting the objectives to a time frame and then from that time frame connecting it to the investments that match those goals appropriately.
But you still hear people who say, well, maybe just a line of credit is good enough. I can always borrow during hard times.
Yeah, but then if you borrow during hard times, who are you making rich? You're helping the bank. I have yet to see anybody give me that as one of their goals. I want to help the bank make money. No.
So this is really what financial planning is all about.
For sure.
And just before we leave, I think that maybe sort of a primer. I know that we do have people coming to us who have debt. Sure. And I know that one of the first things you say is your best investment is to take care of that debt. Well,
for sure. I mean, if you want to make your life less stress, you want to pay off your debt, it's the only place that you can guarantee money tax-free. Mm-hmm. Because you pay off your debt, whatever that interest rate is, that's what you're earning, and you're earning it tax-free. Mm-hmm. So for sure, that's a wise financial planning choice to make.
And of course, talking about saving taxes, we know the tax-free savings account.
Yes, absolutely. Yeah. Maximizing your tax-free savings account is one of the best things you can do, both from a tax perspective, from an estate planning perspective, and in some cases, from an emergency fund perspective.
And coming down the pike, there will be an opportunity to save for those of you who don't have a home. It's getting harder and harder to buy a home now, but there will be a saving incentive there as well.
Yeah, and we'll talk more about that in the future. The special new tax-free savings accounts that you can get a deduction and prepare for your home. And for those of you that are younger, that's a great way to go. And for those of you that have young people in your life, it might be a great move for you to help them and maybe reduce your taxes and do some estate planning to boot.
Now, one thing we've noticed this time around, as you mentioned, markets go up and markets go down, but this time around we've noticed that there doesn't seem to be as much what you might call panic. Is that because there's other concerns like inflation, high cost of putting gas in your car or vehicle? Is there something, other factors at work, or is it people are just becoming more savvy with respect to the way that markets operate?
That's a really tough question. Mm-hmm. I think there's always going to be some people that do have a panic. I think there's a lot going on right now, so priorities aren't necessarily always looking at that, and hopefully for those people that are mainly invested in the markets that are fluctuating, then this is not their emergency fund money. This is not their money that they're using to buy their groceries or fill their gas tanks, and it's not the money in the next couple of years. So I think that the more the objectives are well matched, then it reduces that kind of panic.
But before we leave, maybe we should just go over in this past couple of years with the coronavirus, the pandemic, how it's affected people's communication with one another. And here in our office, we've noticed that as well too. We're doing a lot more electronic communication.
Sure. Whether we liked it or not, technology has grown in use over the past couple of years, going on to 3, as you say. And so not everyone, but many people have adopted using, Zoom, Teams, and that sort of thing to connect to work as well. And
is this going to happen? Is this going to continue in the future with, well, just give one example, the cost of even coming to meetings.
Sure.
You have to pay for the gas to come here, whereas you can go on a Zoom call, or you can, well, of course, use the telephone as well too.
Sure.
And if the weather's bad,
yeah.
So this could be a game changer almost.
Well, I think it's already been a game changer for some people. I mean, there are a number of people that the human contact, being able to be right next to you, is really important, and so that's a choice that they can make, and that. But other people, you're right, from the convenience, from the cost perspective, being able to sit in your PJs and have a meeting for some people is pretty cool, and so it gives more choices.
Now, we've been doing quite a bit of Zoom, and with the craft people, it's called Teams. It's the same thing, really.
Yeah.
But also people coming into the office, not so much as before, and we also have the opportunity during the good weather to meet outdoors.
Yeah, once again, I mean, our patio appointments were given birth last summer as a way to be able to do some face-to-face meetings, and because they were actually very pleasant and everybody enjoyed that environment, we once again are having patio appointments because now we're heading into the summer.
Yeah. So just summing up, we have, of course, the markets are going down. They talk of what's called, a bear market and a recession. These are various terms you hear tossed about, but they only last for a certain period of time.
Well, for sure, nothing ever lasts forever. Neither the bad times or the good times, and being best prepared and being well informed will serve everyone really well to survive.
Now, you've often heard that expression, when's the best time to invest?
When you've got the money.
So that with the conditions that we experience at the present time, if there's extra money around, should people be putting it into, keeping it in, under the mattress or in a savings account, or should they be taking advantage of some lower prices?
For sure. I mean, I don't think anybody ever should even think about going under the mattress, because it can get stolen and it can burn. So neither of those options are giving you any kind of protection. And so I think that it just depends again on your goals. If it's something in the immediate that you need, well, then you want to keep that money in a safe place. But if it's money that you aren't sure what you would want to do with it, buy on sale. I
just have one other thing just to go over this. Now, we're talking about the markets have dropped, but they're dropping from a particular point. So really, when you're talking about losing money, your money was at this particular point. Now, it may be down here, but it was at this particular point in time. So really, you haven't lost. You've just lost that gain during that particular period, and that will come back.
Right. I mean, depending on how long you've been invested, it may be that it's not it's not looking as good as it was when you saw that December 31st statement, and it may be the gain that you've lost. If you had just invested, perhaps it's, looking like it's a loss of actual capital, but as John has just mentioned, it's not going to stay down forever. It's going to come back, and, being cool, calm, and collected will serve you well. And for sure, anybody who has any questions or is, at least a little bit concerned at all and needs to discuss it further, please give us a call. We're happy to chat with you, happy to invite you out onto the patio.
Right, for sure. Because money is an emotional,
Yes, it is.
and there's no doubt about it. And psychologically, we really feel really happy when we have lots of money. If we even lose a little bit, we're terribly upset. Why is that?
Because it hurts more to lose than it does to win, and that's the way people feel about money.
Right.
And if you think about it yourself, if you lost a $20 bill, you probably go crazy trying to search around to find that. If you found a $20 bill, you're like, yeah, oh, that's great, but it's not necessarily got the same emotional impact.
But if you're concerned,
Yeah, contact us.
yeah, give us a call. And once again, it's been a very challenging couple of years. Certainly, I know we've lived, those of us who have been around for a number of decades, and I think many of our clients have been, have realized that in life, it's not all ups, as I believe Lucy would say in the old Peanuts comic strip. You often have downs as well too, but the sun always comes up the next day.
Yes, exactly.
So once again, any concerns?
Sure, reach out to us. We're happy to chat with you at any time, and look forward to hearing from you.